Over the past trading week, traders have been actively supporting the US dollar. The US currency strengthened across the board amid a rapid rise in US Treasury yields. The US dollar index, which measures its value against the basket of 6 major currencies, has approached the level of 92 for the first time in 3 months. So the dollar finished last weekly session with a gain of 1.19%. It was the best week for the greenback since September 2020. The upbeat data from the US labor market helped to develop the upward movement. February reports on monthly earnings and non-farm payrolls turned out to be better than expected. Moreover, Chairman of the Federal Reserve, Jerome Powell, admitted that the recovery of the US economy could temporarily raise inflation. At the same time, he reassured markets that the central bank will maintain the policy of ultra-low interest rates until the economy returns to full employment and inflation accelerates to 2%. Meanwhile, the euro eased during the previous week and dropped to its lowest level since November. The euro-dollar pair closed the week posting a loss of 1.44%. Even before the US dollar started to advance, the European currency had already been under pressure from a slow vaccination process in the European Union and therefore a slow economic recovery. Besides, some ECB officials said the central bank was ready to implement additional stimulus to keep the yields of the government bonds at lower levels and to support the European economy. The British pound also depreciated against the dollar. Thus, the pound-dollar pair dropped to a low last seen in February 14, even despite the attempts of the UK government to support businesses and households amid the COVID-19 crisis. Investors also paid attention to the statement of the Bank of England about negative interest rates. According to the regulator, there is no evidence that negative interest rates could weaken the UK economy. This was definitely a negative factor for the national currency. The crypto market managed to hold strong against the US currency. Bitcoin has once again returned to the area above $48,000 per coin. However, the uptrend may not last long given the fundamental background. It's recommended to open short positions on Bitcoin at the peak levels. Following the speech of Jerome Powell, traders began to withdraw their funds from the crypto market and invest into safe haven assets. Some analysts believe that Bitcoin may resume its rally and reach the level of $65,000. In the meantime, oil reached its record highs last week. Brent advanced to $69.50 per barrel, posting a weekly gain of 6.28%. Oil traders were cheered by the decision of the major oil producers to keep the output volumes unchanged in April. Besides, Saudi Arabia confirmed its intention to keep the voluntary cuts of 1 million barrels per day for 1 more month. Additional support came from the positive economic data in the United States. The number of new jobs in February exceeded analysts' expectations. Experts at Goldman Sachs have raised its Brent crude price forecast by $5 to $75 a barrel in the second quarter and to $80 a barrel in the third quarter of 2021. Investors hope for a quick fuel demand recovery amid reopening of the global economy, additional stimulus measures, and the progress in the coronavirus vaccine rollout. Against this background, gold was rapidly losing ground. The precious metal closed the session near 9-month low, so gold has been depreciating for the third week in a row. You are watching combined review of currency and commodity markets on InstaForex TV channel. We keep monitoring the financial market situation. Subscribe to our channel and keep up abreast information with us.